Welcome back to Finance Buzz Friday. We always keep you up to date on what's shaking up the financial world, and today we're doing a deep dive on something really interesting. Non-financial misconduct, NFM. It's a hot topic sending ripples through the financial services industry.
Yeah, it really is. It's not just about numbers and balancing books anymore. The industry is realizing that behavior and culture, all that soft stuff, it really has a big impact on how stable a company is and, honestly, their bottom line.
So for our listeners, some might be thinking, NFM, sounds like something I'd get in trouble for back in school. Can you break it down for us? What exactly are we talking about here?
Well, think about it like this. Imagine, a workplace where bullying's happening all the time and harassment is just ignored or discrimination's like totally normal. That's what we're talking about, that kind of toxic environment. And the FCA, the UK's financial watchdog, they're making it really clear that this just won't fly in the financial services world.
And they're not just talking. They're actually out there gathering information, sending questionnaires to firms, and even stopping people with serious offenses from working in the industry. This is serious stuff.
It is. A Denton's report actually found a crazy increase, a 72.2% increase in reports of non-financial misconduct between 2021 and 2023. Now, that could be good, right? Maybe it means people feel like they can finally speak up, but it could also mean things are actually getting worse. The FCA is hoping it's the first one because they believe a culture where people can raise concerns without being afraid is really important for a healthy financial system.
Yeah, that makes sense. A company built on fear and silence, that's just asking for trouble, not just in finance, but anywhere.
Exactly. And it's not just about protecting employees either. The FCA actually sees a connection between NFM and their main objectives, protecting consumers and keeping the whole UK financial system honest and running smoothly. They're basically saying that if a firm can't even manage its own people the right way, how can anyone trust them to handle people's money?
And it's not just talk. They've actually done something about it. They barred Russell Jameson, Mark Horsey, and Frank Cochran from working in financial services because they were convicted of sexual offenses.
Yeah, those cases were a real wake-up call. They showed everyone that the FCA is serious. They're willing to hold people accountable, even if what they did happened outside of work. It's a big message. Integrity matters in the office and out.
And it's not just about getting rid of the bad apples. Senior managers are under pressure too. So imagine you're a senior manager listening to this right now. What would you be thinking?
Oh, if I were them, I'd be listening very carefully because the FCA has said that if a senior manager doesn't deal with NFM in their firm, they could be seen as not fit and proper to be in that position. They're basically saying that ignoring bad behavior is just as bad as doing it yourself.
So if you're a senior manager in the UK financial world, it's time to step up and really look at your firm's culture because the FCA is watching.
And they have the power to do something about it.
It's not just about punishment after it happens either. The FCA is actually being proactive and proposing changes to their conduct rules to specifically deal with serious bullying, harassment, and stuff like that. They're setting the rules and making it clear this kind of behavior won't be allowed in financial services.
Yeah, these changes show how serious the FCA is about tackling NFM. They're setting the standards and spelling out what happens if you cross the line. It's a message that the culture in the financial services industry has to change. Systems and controls are crucial for any financial firm that's run well. It's about having clear rules, processes, and ways for people to report things. It's about making a culture where people feel okay speaking up, knowing that they'll be taken seriously and not punished for doing the right thing.
But what about misconduct that happens outside of work? Does the FCA care about that?
Yeah, that's where it gets a little complicated. The FCA's position is that even things you do outside of work can matter to whether you're fit and proper for your job, especially if it makes them question your judgment, your honesty, or your character.
They use the case of John Frensham as an example.
Right, Mr. Frensham was convicted of trying to meet a child for sexual grooming, and the FCA barred him from working in financial services. But even then, the upper tribunal, while they agreed with the FCA's decision, they did criticize how they went about it. They said the FCA needed to show a clear link between the personal misconduct and whether he was fit for his job. It just shows how complex it is to actually put these principles into practice.
And to really highlight this point, we have the case of Ashkan Zahidian. He was also prohibited by the FCA because he caused serious bodily harm.
It seems like the FCA is drawing a line, They're saying certain behaviors, even if they happen outside of work, can show that you don't have the judgment and integrity needed to work in financial services, which has high standards.
So where does this leave firms? Are they supposed to watch what their employees do all the time? even outside of work.
The FCA isn't saying that companies have to fire employees for NFM, especially if it's not related to their work.
But they do want firms to do something.
They need to investigate accusations carefully, think about everything involved, and make informed decisions. They have to balance their obligations to the FCA with UK employment law, which says firing someone has to be fair and reasonable.
It sounds like firms are in a tough spot.
They are. But one thing's for sure. Non-financial misconduct isn't something you can just ignore anymore. Companies that try to sweep this stuff under the rug are taking a big risk.
And the FCA has a few ways to make sure firms take this seriously. They've been using their power to get information and demand transparency.
Yeah, we know they sent a survey to insurance companies asking for detailed data on incidents of NFM.
And don't be surprised if those surveys start showing up in inboxes all over the financial services industry. The FCA wants to see the numbers, and they're not afraid to ask for them.
It's a clear sign that the FCA is watching, and they expect companies to be ready to answer some tough questions. They're putting firms on notice. This isn't a fad. NFM is a top priority for the FCA now, and firms need to catch up.
So the financial world is changing, and firms need to adapt. But how will all this affect the UK as a whole?
That's the big question, right? What are the ripple effects of this increased focus on NFM?
Yeah, it's really interesting to think about, like, the bigger picture here. What the FCA is doing. Are they setting a trend for other industries? Will we start to see this kind of focus on non-financial misconduct in healthcare, education, even government?
Whoa, that is a really thought-provoking question. Could this be the beginning of a bigger change in, our culture where being ethical becomes a must-have, like a basic requirement for anyone in a position of power? That would be a huge shift.
Imagine a world where your doctor or your kid's teacher or even your local MP, they're held to the same ethical standards as the people managing your pension fund. It makes you wonder, right?
Yeah.
About the role of regulators in society. Are they becoming like the morality police?
It's almost like they're saying, hey, if you can't even act like a decent person, maybe you shouldn't have power over others.
Yeah, and in a way that makes sense. Public trust is so important, not just in finance, but everywhere, right?
Yeah.
If people stop trusting the system, it could have huge consequences for everyone. Think about it. Who would trust a doctor who's been caught lying or a teacher who's abusive?
Exactly. So maybe what the FCA is doing is like setting the stage for a bigger cultural shift, one where being ethical is just as important as your skills or your financial smarts.
That's an interesting idea, but it also makes you wonder, where's the line? Where do we draw the line between personal stuff and really problematic behavior? What about privacy?
Those are good points. Remember, the upper tribunal criticized the FCA's approach in the Frensham case. That shows that there's still a lot of debate about how to actually put these principles into practice. We have to make sure that this focus on ethical behavior doesn't end up creating a culture where people are afraid to speak their minds or take risks because they're afraid of being judged or punished.
Finding that balance is going to be super important. We need to encourage ethical behavior without making people scared to be themselves or make mistakes.
Yeah, for sure. It's tricky, and it raises questions about individual responsibility versus holding a whole group accountable. Is it fair to blame a whole firm for what one person did, or should we only focus on the person who did wrong?
It's a tough question with no easy answers. But one thing's clear, the FCA is sending a strong message. The financial services industry needs to change, to move beyond just following the rules to truly embracing ethical conduct as like a core value.
And that's where the challenge lies, but also the opportunity. Because in the end, it's not about checking boxes or avoiding fines. It's about building a culture where people do the right thing because it's the right thing to do, not because they're scared of getting caught.
That's a great point.
Yeah.
But how do you actually make that happen? What are firms doing in a practical way to address these issues?
Well, firms are taking a bunch of different approaches. First, they're looking at their policies and procedures and updating them. They're making sure their codes of conduct clearly cover non-financial misconduct and that they have strong ways for people to report concerns.
So that means clear ways for employees to raise concerns, right? Like a dedicated hotline or an online system or even a manager they trust.
Right. And it's not just about giving them a way to report. It's about making sure they feel safe doing it, knowing that they'll be taken seriously and not get in trouble for doing the right thing.
We're also seeing a lot more training programs and awareness campaigns. Firms were putting a lot of money into teaching their employees about NFM, what the FCA expects, and the consequences of messing up.
Those training programs are really important, but they're not a quick fix. It's about changing how people think, not just giving them information.
And some firms are taking it even further. bringing in outside experts to investigate claims of NFM.
Yeah, that's a good way to make sure things are fair and unbiased, especially when it's something sensitive or involves senior management.
It shows that companies are taking this seriously, and they want to create a workplace where there's no misconduct.
And of course, firms are also getting ready for the FCA to be watching them even more closely. That survey they sent to insurance companies, that was just the start.
I bet we'll see similar data requests across the whole financial services industry. The FCA wants the hard facts, and they'll ask for them.
This whole data-driven approach is a big change. It makes firms go beyond just saying they're committed to doing things ethically and actually prove it with real actions.
It feels like the financial services industry is about to go through a big transformation, one that could have effects way beyond just finance.
It is. It's being driven by a lot of things. The FCA's tough stance, society's changing expectations, and this growing understanding that doing things ethically is actually good for business in the long run.
It's a big moment, and it'll be interesting to see how it all unfolds. But what does this all mean for the average person, someone who's not in finance? How will this impact the UK's economy and society as a whole?
That's the question, isn't it? And it's one that deserves some serious thought. The potential impact is huge, and we need to think about it carefully.
Yeah, it's kind of big when you think about it, all the ways this shift towards like a more ethical financial sector could change things. I mean, there's good and maybe, some challenges too.
Right, let's start with the good stuff. A cleaner, more ethical financial industry. Sounds like a win-win, right?
For sure. A financial system that's honest, works for everyone. Consumers feel better knowing their money's being handled the right way, and investors feel more confident that the businesses they're supporting are doing things ethically.
What about the people working there, the employees?
Yeah.
A workplace with no bullying, no harassment, no discrimination. That sounds amazing.
Yeah, it does. A good working environment where people feel safe and respected and like they matter, it can actually lead to better productivity.
Yeah.
Less turnover and even more innovation. Happy employees work better, and that's good for the whole economy. So a more ethical financial sector could make the UK economy stronger and more stable and, ultimately more successful.
That's the idea. But we got to be realistic. There might be some bumps in the road.
Okay, so what are the potential downsides? What should we be watching for?
One thing to worry about is going too far. In trying to get rid of all the bad behavior, we got to be careful not to create an environment where people are too scared to speak their minds.
So it's like finding that balance, right, between holding people accountable and letting them be free.
Yeah, exactly. We don't want a society where people are afraid to say what they think or take risks because they're worried about being judged or punished.
Another challenge could be the cost of all this, making sure everyone's following the rules, all these new policies, procedures, training programs, that stuff adds up.
It does. And those costs, they'll probably end up being passed on to consumers, like higher fees or maybe lower returns on investments.
So there's a trade-off. A more ethical financial sector might come with a price tag.
It might. But we can't forget that not dealing with non-financial misconduct also comes at a price. Scandals, fines, damage to a company's reputation, all that can really hurt businesses and eventually the whole economy.
So it's about figuring out what's more important, weighing the costs and the benefits.
Exactly. And finding that balance is going to be tough for everyone, regulators and businesses alike.
Sounds like we're talking about a journey here, not a destination.
That's a good way to put it. And it's a journey that needs everyone talking openly, thinking things through, and being willing to learn and change as we go.
But at the end of the day, it's a journey that's worth taking. A more ethical financial services sector is good for the UK, good for the economy, good for all of us.
I completely agree. It's about creating a financial system we can all be proud of. One that's honest and transparent and really committed to doing the right thing.
Well, that's about all the time we have for today. Thanks for joining us for this deep dive into the world of non-financial misconduct on Finance Buzz Friday. It's been a really interesting discussion, and it's clear this is a big deal with a lot of implications. We'll be sure to keep you updated as things develop.